call with Robinhood, which I actually already did, but for Q1. So this is the real version, the live version, and you're about to hear from Vlad Tenev, the CEO of Robinhood.
So far, I look forward to continuing to invest in crypto. The third part of our 2023 roadmap is exploring new growth opportunities to broaden the scope and geographical reach of our products so we can add more customers and increase our revenues over time. We remain focused on our ambitious goal of launching brokerage operations in the UK around the end of the year. As you know, we have an existing license in place, a brand that resonates, and experienced leaders like JB McKenzie running the effort. We've been spending a lot of time with customers and are starting to hire key positions on the ground, including bringing on Jordan Sinclair to lead Robinhood UK. We're getting even more excited to drive innovation in the UK market, like we've done in the US.
I hope we're live.
Another business we recently launched is Sherwood Media, a new media company that is focused on providing the best financial content covering the markets, economics, business, technology, and the culture of money. Our goal is to build on the success of Robinhood Snacks, which is one of the largest financial newsletters in the US with over 10 million weekly readers. We've already started signing multi-year advertising partnerships with NASDAQ, CBOE, and other partners. We're excited about our progress across multiple geographies and business lines. We believe these investments will enable us to serve more customers while also growing and diversifying our revenues. As I reflect on all that Robinhood has accomplished so far in our history, I'm energized by our even larger potential over the next decade. We're really excited about the roadmap ahead of us, and there's so much to do.
The long tail.
We see a huge opportunity to innovate for our customers, grow assets, gain market share, and change the industry for the better as we democratize finance for all, our 23 million customers and many more to come. With that, I'll turn the call over
we're at
to
23
Jason.
million.
Thanks, Vlad. It's good
right?
to speak with everyone today. After growing revenue for 5 straight quarters and getting lean on costs, in Q2 we reached GAAP profitability for the first time as a public company.
Correct this time.
I'm incredibly proud of our team for all of their progress over the past year, transforming the financial profile of our business and positioning us to drive long-term shareholder value. While we're excited about reaching this milestone, we're just getting started on the journey to drive higher levels of GAAP EPS over time. We remain focused on investing for growth to add new revenue streams like securities lending and instant withdrawals, as well as gain market share in our existing businesses. At the same time, we're working to get leaner in ways that don't detract from our growth. For example, in Q2, we made some targeted reductions across a few teams where we saw increased productivity and opportunities for greater efficiency. We're confident that our growth and efficiency efforts can drive great outcomes for customers and shareholders over time. Let's now look at how our business grew in the second quarter as we make progress on our mission. We measure our progress in terms of assets under custody and net funded accounts. Our customers' assets under custody increased 13% sequentially in Q2 to $89 billion, primarily due to higher equity valuations and customers continuing to deposit money into Robinhood.
Higher equity. That's a
Looking
great
at net
increase.
deposits, they were $4.1 billion in Q2, which translates to a 21% annualized growth rate relative to Q1 AUC. We believe these resilient customer net deposits position us really well for continued asset growth as markets rise over time. Turning to net funded accounts, which represent unique customers on our platform, they increased to 23.2 million in Q2, up 70,000 from last quarter and 310,000 from a year ago. Additionally, we are excited about the growth we are seeing in our retirement product, which we launched in January. We now have over 325,000 funded retirement accounts, up 75,000 from last quarter. And Gold subscribers increased for the third quarter in a row to over 1.2 million, up about 60,000 sequentially and 150,000 since we launched the Gold Yield high yield offering. Looking at our financial results, we generated positive GAAP net income of $25 million in Q2, and EPS was 3 cents. When we look at our 37-cent increase from a year ago, it's great to see the broad improvement across revenue, OpEx, and SBC that led to the Q2 result. In addition, we have continued to drive profitability higher on an adjusted EBITDA
Let's verify
basis.
that with GPT.
It grew to a new high of $151 million in the quarter, and our adjusted EBITDA margin also reached a new high of 31%. We are excited about the progress we've made on margins, with adjusted EBITDA margin up over 55 points from a year ago. Now let's review Q2 revenues. Total net revenues were $486 million, a 10% increase from Q1, as net interest and other revenues increased during the quarter. Q2 ARPU was $84, up from $77 last quarter and the highest level since 2021. Transaction-based revenues were $193 million in Q2, down 7% sequentially,
Yeah, it's like
primarily
one is
due to lower
a
crypto
stock trading
volume
app,
and lower options revenue per contract.
and the other is a
Moving to
social
net
network.
interest revenues, they were
Explain.
$234 million in Q2, up 13% sequentially. The increase was driven by higher interest earning assets, short-term interest rates, and securities lending activity. Q2 interest earning assets were $26 billion, up 16% or
Jeez,
$4
look
billion
at that.
sequentially,
Whoa.
primarily driven by gold customers continuing to bring more deposits to Robinhood.
Damn, you guys are making
Looking ahead,
money.
we anticipate
This is why we
Q3
buy
net
HUD.
interest revenues will increase in the zone of $15 million versus Q2. This outlook assumes securities lending revenue in line with Q2, the addition of X1, and today's level of balances, deposit rates, and Fed fund rates. Of course, our Q3 result could be higher or lower depending on how the quarter plays out. Moving on to other revenues, they were $59 million in Q2, up $33 million from Q1, primarily due to seasonally higher proxy revenues. Looking ahead, we anticipate Q3 other revenues will return to the mid-$20 million zone, given typical proxy seasonality. I also want to share some color on what we saw in July. Accounts and assets continued to grow as customers deposited into their accounts and equity valuations increased during the month. July net deposits were roughly in line with the Q2 monthly average.
About half.
In addition, as Vlad alluded to, we saw trading volumes pick up in equities, options, and crypto compared to our Q2 monthly averages. Finally, margin and cash sweep balances continue to grow from their Q2 levels. We're glad to see our customers continue to engage on the platform and look forward to sharing our full monthly metrics in a couple weeks. Now let's review Q2 expenses, starting with OPEX prior to SBC. It was $357 million in Q2, at the lower end of our prior outlook range. Looking forward to the second half of the year, we're getting more efficient. So even while onboarding X1, we are keeping the midpoint of our full year outlook range unchanged. We're also tightening our range as we're now halfway through the year. Taken together, our updated outlook for 2023 OPEX prior to SBC is a range of $1.43 to $1.47 billion.
I wish I knew
Turning
what that
to
number
SBC,
meant,
it
but
was $109 million in Q2, right around the lower end of our prior full year outlook range. Looking ahead, given the progress we've made through the first half of the year, we're lowering our SBC outlook again this quarter. Our updated outlook for 2023 SBC is a range of $900 to $940 million, which implies SBC will continue to improve in the second half of the year. Our progress here means that our outlook for 2023 dilution has also improved. We now expect our diluted share count, which was 961 million at the end of 2022, to increase by 3% or less this year. Turning to capital management, our balance sheet is strong with over $6 billion of cash and investments. We use a small portion of that to run our business day to day, so we have billions of excess cash to deploy.
I think I kind of remember
In addition, we are now profitable on a GAAP basis, and we generated nearly $400 million of adjusted EBITDA over the past 12 months. So we believe we are well positioned to deploy capital over time to drive growth and shareholder value. One way we deploy capital is M&A that accelerates our long-term product roadmap. In Q2, we acquired X1, which we see as a capital-efficient way to bring a great new capability to our customers. The X1 platform provides their roughly 80,000 cardholders a no-fee stainless steel credit card with attractive rewards on each purchase, and we're incredibly excited to begin offering credit to Robinhood's 23 million customers. Looking ahead, we continue to look
Watch
for
out,
M&A
SoFi.
opportunities
Watch
like this
the
that can complement our organic product
Watch out.
development efforts and are a good strategic, financial, and cultural fit with Robinhood.
Watch out.
Another way we plan to deploy capital over time is through share repurchases. As you know, we've been working for the past 6 months to purchase the 55 million Robinhood shares that Emergent Fidelity bought last summer. We continue to have discussions,
That's great. That's
and we'll
such a
update
good.
you when
That's
we
a
have
good
more
guy
to
move.
share.
That's a good guy move.
In closing, I'm really pleased with the financial progress we've made over the past year, while continuing to deliver new capabilities and enhancing customer experience. Q2 was our first quarter of GAAP profitability as a public company, and 5th consecutive quarter of revenue and adjusted EBITDA growth. And we're not done. We continue to focus on driving profitable growth over time. With that, Chris, let's go ahead and move to Q&A.
Thank you, Jason. For the Q&A session, we'll start by answering shareholder questions from Say Technologies. These are ranked by the number of votes. We'll pass over any questions that we already addressed on this call or in prior quarters. We'll also group together questions that share a common theme. After that, we'll turn to live questions from our analysts. So
this is what you want to see, right? That's what you want to see.
This one's for
That's
Jason.
a good chart.
Siraj P asks, what is the reason top management keeps selling stock?
Yeah, thanks for the question. We want to have management align their interests with our shareholders, and we think our compensation structure does that. So most of our management team's compensation is in the form of stock, and because of this, it's normal for our management team to sell a small portion of their holdings as income.
Why don't you?
So management sets up automatic selling plans. They're called 10b5-1s, well in advance of the trades that you might see come through. These are automatic, and they sell small portions of their stock over time.
Yeah,
as you look across our management team, you'll also see that we continue to be large holders in Robinhood stock, and certainly we're highly motivated to create shareholder value.
Thanks, Jason. The next question comes from Lance G., who asks, can you provide an update on the 24-hour trading and how it's going? Vlad, do you want to take that one?
Sure. We were super excited to launch 24-hour market. We were the first U.S. broker to offer 24-hour trading of single-name stocks, and we rolled it out to 100% of our customers in July, just a few weeks ago, and we'll be adding 9 new tickers soon to trade 24/5. Plus, especially for those of you that are in the New York City area, you may have seen us doing some marketing around it. We're hearing great feedback from our customers, particularly those that trade more actively, and we're continuing to invest to make the offering even better.
Great. Thank you, Vlad. The next question is from Atanu M., who asks, do you have a plan for share buybacks to regain investor confidence? Robinhood has been way under IPO valuation for more than a year now. What is your plan to rebuild investor confidence? Jason, do you want to take that one?
Sure. Thanks for the question, also the feedback. There's a number of ways that we're working on delivering value for shareholders over time. First, we're investing organically in our business, and you hear us talk about the new products that we've recently delivered as well as ones that are on the roadmap, and we're super excited about that. Second, we've got a super strong balance sheet, and we're using it for M&A as a way for us to move faster. You saw that this quarter with our acquisition of X1. I also think there's more opportunities like this, and we're looking out for them. And as you mentioned, share repurchases is another lever. And as you know, we continue to work on purchasing the 55 million shares that were acquired by Emergent Fidelity. And over time, we'll consider other ways to return capital to our shareholders. In terms of our more recent financial progress, we've hit some pretty big milestones for the business. Good. Our revenues in Q2 were up over 50% from last year. Our costs are down hundreds of millions, and this led to us generating nearly $400 million of adjusted EBITDA in the last 12 months. We've also reached a new high of 31% adjusted EBITDA margin this quarter, so really happy about that. And of course, really proud that we reached GAAP profitability for the first time as a public company with 3 cents per share. So all in, I think we're in a great position, and we've got really good momentum to deliver even better results for customers over time and shareholders.
$400 million.
Thanks, Jason.
In the quarter?
The next couple questions I think maybe Vlad and Jason can share. So Anuj B. asks, can you talk about the acquisition of credit card provider X1? How does this strategically help Robinhood with future plans? Was X1 a profitable company at the time of the purchase agreement? And will this bring more users and gold users to Robinhood? And then Omer D asks, how will X1 be integrated into Robinhood exactly? Vlad, do you want to start?
Yeah, I'd be happy to start. We're really excited to work with X1 and the team over there to build a category-defining consumer credit business. We think the opportunity is incredibly strategic for Robinhood and incredibly useful for our customers. I think that's one of the goals for Robinhood, as I mentioned in earlier in the call, is we want to help customers not just trade and invest, but perform a wide variety of their financial needs. And we want to be their financial home and provide easy-to-use, accessible interfaces and high-value products. Credit is a space that's incredibly important to many of our customers. It's something that we've been exploring for many years, and it directly addresses a lot of feedback that we've been getting from customers. A lot of our customers want a Robinhood credit card from us, and it aligns well in our mission. We believe that we can actually do something really good here and provide credit to people who haven't always had easy access, young people, students, and immigrants.
Actually democratizing
one of the things we really like
about
joining with X1 is, like Robinhood,
is a big
they think of this as a technology problem, and
not in the first
they leverage
world,
technology to build a simple and seamless user experience. So I think it's going to be great for customers, great for shareholders as we scale the product, and I'll defer to Jason for some of the financial details.
Yeah, thanks, Vlad. At the time of the purchase, X1 had about 80,000 cardholders. We haven't provided other details on their finances prior to the acquisition, because really we think the big picture here is that this deal is really about the opportunity to scale credit with our 23 million customers, and less so about X1's finances prior to the deal. Qualitatively, I'd say that their business was growing leading into the acquisition. We really like the quality of their credit and underwriting, so we're in a good spot, and their overall economics were also improving as well. In terms of integration, right now we are integrating the team, and we're working closely together on strategy, and Deepak is reporting directly into Vlad. So super excited about the potential here, and we'll share more updates as we make progress.
I'll also just say that I was at dinner with Deepak last night, and he pulled out a prototype for the new Robinhood credit card, and it's beautiful, and I'm very excited to share it with our customers.
Awesome. I look forward to getting one too. All right, so the next question is from Gustavo G, who asks, when will bonds, CDs, etc. be introduced to Robinhood? Vlad, do you want to take that one?
Yeah, thanks for the feedback. We're always listening to customers, and we want to make sure that we offer an expanding selection of products and services over time. I would like for you and for all Robinhood customers to be able to use us for all of your needs and not have to turn to other providers for investments. Today, we have some similar products. For example, bond ETFs and Robinhood Gold that offers 4.9% on uninvested cash with up to $2 million in FDIC insurance. But we know that there's more things that we have to add, and we're not going to stop. So over time, you'll see us continuing to listen to customers and adding even more investment options.
Great. Thanks, Vlad. And then the next one's also for you. Victor S. asks, when will AI capabilities begin appearing in the application?
Yes.
Thanks for your question. AI is really important. It's a strategic shift in how Robinhood and many companies will have to think about operating their business, and something I think about a lot. Over time, to be competitive, we think every company will need to become an AI company. And I think given our track record of innovation and the technologies that make up the Robinhood offering, we think we're naturally positioned to become the leader in financial services for AI. We're excited to explore further how the technology can improve all aspects of the Robinhood experience for our customers and create efficiencies in how we offer our products and run our business. We're actively engaged also in recruiting high-quality talent to lead these efforts at Robinhood.
All right. Thank you, Vlad. The next question is from Richard B., who asks, is it too early to think that Robinhood is strong enough to do dividends? Jason, do you want to take that one?
Sure. I think we're in a really strong place as a company. We've got over $6 billion in cash and investments on our balance sheet. This is the 5th consecutive quarter of revenue and adjusted EBITDA growth. We've got record margins this quarter, and we just reached GAAP profitability. So I'm really liking the strength of the business and the position that we're in right now. In terms of returning value to shareholders, the traditional debate is share repurchases versus dividends. Personally, I'm more inclined to use share repurchases. And on that front, as we mentioned, we're working on purchasing the 55 million Emergent Fidelity shares, and we'll share more on that as we make some progress.
Which is such a good move.
Thanks, Jason. I think we have time for one more Say question, so I'm going to put together two.
How is this stock not ripping?
Thomas
This is bullshit.
P. asks, how has the growth in retirement accounts been? Have you been seeing many people transferring accounts over to Robinhood for the 1% match? And Michael A. asks, does Robinhood ever plan to offer employer-sponsored retirement accounts such as 401ks? Vlad, do you want to take that one?
Yeah, I'd be happy to field that. Glad to hear of the continuing interest in our retirement offerings. We're very proud of our retirement offering. It gives our customers another tool that they can use to control their finances and build wealth over time. Customers love the 1% match, and today we announced the 3% match for our gold customers. The progress so far has been great. We're approaching $1 billion in AUM, and we have seen a big pickup in transfers from other institutions for the 1% match.
Maybe I'll save.
Regarding the second question about employer-sponsored accounts, we think it's a space that is begging to be disrupted.
It's 3%? That's a great match.
We don't have this on the near-term roadmap, but definitely wouldn't rule it out. That said, there are also tons of individuals who don't receive a match from their employer today. So if you're an employee without a match, come to Robinhood and we will match for you.
All right. Thank you, Vlad. And that concludes our shareholder questions from Say Technologies. We appreciate our shareholders taking time to ask these questions of Vlad and Jason, and we look forward to more next quarter. Now I'll turn the call over to Gigi to lead Q&A from our analysts.
Thank you. As a reminder, to ask a question, please press star 11 on your telephone and wait for your name to be announced. To withdraw your question, please press star 11 again. Please stand by while we compile the Q&A roster. Our first question comes from the line of Devin Ryan from JMP Securities.
These live streams, they're intense.
Hey, thanks. Good afternoon, Vlad and Jason. How are you?
How's it going?
It's going great. I guess first question on expenses. The headcount reduction that you noted, I think the press reported 7% in June. I'm assuming the one-time costs associated with that are in the guide. And then I guess I'm curious if there's any future cost savings that could come with that. It's not as material as some of your others, but I would assume there's still probably something related to that. Thanks.
Yeah, Devin, we did have some one-time costs on that reduction. It's included in the OPEX that we reported for Q2. And we viewed these changes as more of kind of ongoing management of costs, and so we did not exclude them from the calculation of adjusted EBITDA this quarter. And then in terms of kind of go forward, the effects of the forward cost savings on the reductions, as well as the additional costs of integrating X1 are all factored into the OPEX guide that we gave, and we tightened the range there and left the midpoint unchanged for the rest of the year.
Got it. Okay, that's fine. And then in terms of just some of the improvements you're seeing in investor engagement, obviously you mentioned some of the transaction activity recently, and we're seeing margin balances stabilize and improve. Still good deposit trends. It sounds like all that's continuing into July. Just love to get a little sense of whether this is really kind of in the active trader cohort, or if you're seeing some of these improvements across the customer base more broadly, and then just at a higher level, kind of what you're hearing from different customer cohorts around their interest in trading. We've obviously been in a pretty tough and exhausting, I think, market for the past 18 months. Just where sentiment is today, and it sounds like some early signs of maybe recovery. So I'd love to talk about that. Thank you.
Yeah, so I'll maybe lead, and then Vlad, you can weigh in a little bit as well. So, overall, the sentiment from our customers about Robinhood is improving. We talked about improvements in NPS year over year last quarter, overall up 20 points year over year on average, and up over 30 points for our more active traders, which is really encouraging. And we're continuing just to focus in on user experience and doing things like adding stock screeners and scanners, as well as Robinhood's 24-hour market. So I think our investors are noticing. Vlad mentioned an increase in market share year over year, both in equities up 15% and options up over 20%. And as I look at kind of deposits, customers continue to deposit their funds with Robinhood, over $4 billion in the quarter, and we continue to see strong deposits in July. And trading kind of picked up throughout the quarter. April, I think, was seasonally low, and then we just accelerated as the quarter progressed, and July was also good, as we commented in our more formal comments. So, overall, I would say that the work that we've been doing, improving user experience and product selection, is really showing through for our customers.
There's your chart.
Yeah, I don't really have much to add. We've been really pleased by our progress. Jason mentioned and reiterated the market share gains, and I think the NPS improvements, particularly for active traders,
let me show you
have
where
been
we
really
should
good.
be.
It's been really good to see that translating to market share gains across all of the assets that our customers trade.
All this is the gap.
All right, I'll leave it there. Thank you, guys.
Thanks, Evan.
That remains to be filled.
Thank you. One moment for our next question.
Everyone knows that. That's not about trading.
Our next question comes from the line of Dan Dolev from Mizuho.
Hey, guys. Great results. Thanks.
How's it going?
Hey, Vlad. How are you? Sorry, I had some issues with the phone, and I kept getting rebooted. So I really appreciate it. Great results.
This is what we need to see.
And I don't know if this was addressed, but we did some work that showed that you were gaining share from your competitor in crypto. So apologies if this was addressed. But is there anything you can call out on why you're gaining share? What is driving the share gains at Robinhood and crypto from your biggest competitor? And then I have a quick follow-up.
Yeah, I'll go ahead and take that. It's a little harder in crypto to measure market share. It's not as easy as it is with equities and options, but by our analysis, it does look like we're gaining share in the coins that we offer. In terms of why, I'd probably point to the value proposition. We think we're the best place for retail traders to buy crypto for the coins that we offer, and also we think we've got just a great user experience. And so those are the two things.
Yeah, and I'd also add that
totally.
We've offered customers great value in addition to a great customer experience. Like at Robinhood, you get more crypto for your dollar than at most of our competitors.
Crypto is so smooth.
I think we've started to do a better job communicating that in the user interface.
Coinbase, actually,
so we're making it incredibly clear we're trying to make it more and more clear to customers just how good of a value they're getting.
Like Coinbase needs a trading app.
Of course, I'd add that it's very important for us to be the most trusted and safest company in crypto. And I think with all the turmoil in the space over the past year or so, I think there has been a little bit of a flight to safety, and we're seeing that reflected in some of the market share gains you're seeing, and that's something that we'd like to continue to invest in.
Yeah, it's pretty amazing. Great stuff. And then a quick follow-up. I mean, great progress on the retirement stuff. I mean, we're very excited about this here at Mizuho. Do you think that is it a fair statement to say that over time, as this grows, this is going to show up in obviously like bigger impact on MAUs and it'll the MAUs it'll kind of cause a positive inflection in the MAUs because of the retirement account, the retirement offering? Thank you.
Yeah, I'd be happy to field that. So MAUs did increase from May to June. Of course, when you think about all the things we've been focused on as a company and on the product side over the past year, they haven't naturally flown into MAUs because even retirement itself, it's sort of a passive long-term investing product and not typically a product that you associate with sort of like active trading or engagement. Although there's advantages for all types of investors with retirement products. Active trader investments, active traders are kind of a relatively small subset of the overall user base. So they drive a disproportionate amount of revenue, and making them really, really happy, you're probably not going to see that as reflected in the MAU metric. So we've made a lot of progress over the past year, and I think that's been progress that's sort of like on another axis than MAUs and trader engagement. That said, we are working on a bunch of things that we think will bring more customers and more transactors into Robinhood, and we do expect over the long run the MAU metric to follow. There's a lot of investments in place that we think will pay off for us there.
One of the things, Dan, that I'm really excited about is our continuing investment in Gold. That really deepens the relationships with our customers. We offer them 4.9% on their cash sweep balances, and as we announced today, a 3% retirement match. And so I think, as we deepen our relationships with our customers, as we expand our product selection, you're going to naturally see engagement tick up over time.
Yep, I would agree. Great results. Congrats again. Thank you.
Thanks so much.
This is the Fed vacuuming.
Thank you. One moment for our next question.
This is called margin call.
Our next question comes from the line of Steven Chubak from Wolfe Research.
Hi, good afternoon.
Good afternoon.
Wanted to start with a question on expense. You guys have done a nice job delivering efficiency gains while executing on the product roadmap.
This trend from
that
here.
That said, your expense per employee is still relatively elevated when we benchmark versus fintech as well as retail brokerage peers. And wanted to get a sense as to where you see this metric trajecting as the business scales and as you expand your geographic footprint.
Yeah, thanks for the question. I'll take that one. I would generally agree with you. We've been focused on reducing our costs, and rationalizing the headcount. And our intention is to be lean and scrappy in the way that we grow our business and drive leverage to our business over time. And so we've been focused on, our cost per employee, as you pointed out. One of the changes that we made earlier this year is we moved from a stock-based award program that grants 4-year awards to a program that grants awards that vest over 1 year, and we think that that's a prudent way to do it. Another thing, as we look at our employee footprint, we're very heavily concentrated in higher cost areas in the U.S., and that represents an opportunity for us to balance out the mix of geographies that we work in as Robinhood employees. So it's something that we're working on, and I see that as an opportunity.
No, really helpful color. And speaking of operating leverage, did want to ask on the profitability outlook. Looking ahead, just now that you've reached GAAP profitability, remind us how you're thinking about normalized GAAP margins for the business at scale. And now that you've hit this milestone, was hoping you can give us an update on what the next milestone is that you're aspiring to.
Yeah, thanks for the question. Look, long term, what I'd tell you is that our objective is to maximize GAAP EPS and free cash flow per share. We're not giving any specific near-term milestone targets there, but when I look at the cost structure of our business, it heavily skews towards fixed costs and less so towards variable costs, which if you can manage those fixed costs really effectively as you grow your top line, you can deliver a lot of leverage to the bottom line. And so as I think about like what kind of margins are possible for this business, I don't see any reason why we can't deliver the kinds of margins that you see at other financial services companies.
Very helpful. Thanks for taking my questions.
Yeah, you're welcome. Thanks for the questions.
Thank you.
Thank you. One moment for our next question. Our next question comes from the line of Michael Cyprys from Morgan Stanley.
Hey, Mike.
Hey, Vlad, Jason. Thanks for taking the question. Maybe just starting with the active trader opportunity set. I was hoping you might be able to update us on the opportunity set with futures. I know you guys have some plans to launch that this year, I believe. Maybe you can update us on the progress there and the build out. And then similarly on cash settled index options, where is that on the priority list, and what sort of investment is required on your platform to enable that, or could you just flip a switch and enable that today?
Yeah, futures is something that we're very excited about. We have been spending a lot of time thinking through how to make a really, really great customer experience, particularly on mobile, because as we look at the other offerings in the market, we think that there's a gap that we can fill with user experience, particularly on mobile. So we're spending a lot of time thinking through that, talking to customers, and we're putting together a really, really nice offering. Right now, we're estimating that it'll land in the first half of 2024, and the team is hard at work just making the product as great as possible for our customers. I think on the cash settled options front, we're also hearing that from customers that that's an attractive product and will enable them to manage their risk. That's also slated to land in the first half of 2024.
Great, thanks for that. And just a follow-up question on the X1 acquisition. I was hoping you could talk about your go-to-market strategy for how you're thinking about bringing the card offering to your existing customer set and broadening it out over time. Where do you think there's room in the marketplace for differentiation? And then can you talk about the underwriting process and the criteria there, just given some of the potential customers may not have much income or credit history? How do you get comfortable and manage the credit risk that this introduces?
Yeah, I think that's a great question. In terms of go-to-market, we kind of see two near-term opportunities that are interesting. One is just making a great card available to sort of the typical Robinhood customer. Robinhood customers, a lot of them are credit card primary, and we've been hearing lots of feedback from them on what types of offerings they would like. And we think that we can make something that's really, really compelling for them. We also see an opportunity, and I mentioned this a little bit earlier, for people who are younger, maybe college students, people with limited credit history but reasonable earning potential, like immigrants, who have a hard time getting credit right now. And we think with technology and the underwriting capabilities that X1 has offered and has kind of been improving over time, we can build something really, really good for them as well. Of course, credit is an incredibly important market, large space. As a business, there's a lot of margin to be had there. So we're not just going to stop there. We want to build a suite of comprehensive credit solutions across multiple products for our customers. So this is just the beginning, but we think even within credit cards, there's a massive opportunity for us.
Yeah, one of the things that we were really excited about for the X1 team is just the quality of their team around underwriting. And we're really impressed with the high quality nature of their loan book. It's prime plus, so really, really happy with that. And, in terms of their underwriting, they look at things like income and credit bureau and the normal things that you'd expect the teams to be looking at.
Great, thank you. And congrats on the profitability milestone this quarter.
Thank you.
Thank you.
Thank you. One moment for our next question. Our next question comes from the line of Ken Worthington from J.P. Morgan.
Hi, good afternoon, and thanks for taking the question. I wanted to follow up on the monthly users question earlier, so a couple of points here. Maybe first, you have 23 million accounts and MAUs of about 11. So first, funded accounts were at their highs in 2Q, and market conditions have been improving in what I guess I'd call the more innovative part of the stock market this year. But MAUs were at their lows in 2Q. So I guess maybe first, does this relationship between MAUs and funded accounts seem sort of reasonable to you over time? And then maybe second, as we look at this, call it 10 million account gap between the two, what portion of these inactive accounts are ones that you think you can get to re-engage in normal market conditions, or if market conditions stay normal sort of over time?
Hey, Ken, thanks for the questions. One of the things that is a weakness of MAUs is it's measuring engagement just for those that engaged in the month. And for more active traders, I think that there's a fairly high correlation there. But for the broader set of customers, less so. And we provided a couple quarters ago some context that MAUs for all of Q4 was 16 million, and for the past 6 months was over 20 million. And so it's not that they're dormant customer accounts, it's that they're just not necessarily engaging every single month. And that's actually, for a lot of people, is actually a very normal and healthy amount of engagement. I do think over time, as we broaden our product selection and deepen relationships with customers, that you're going to see a more consistent relationship between MAUs and total funded accounts. But in the shorter term right now, we have seen those kind of move in opposite directions.
I'd also add that there's sort of an asset dependency here. Like the brokerage side with equities and particularly growth stocks, like that market has been doing rather well in Q2, but crypto has kind of continued to soften. So you sort of see multiple conflicting things, and that can be reflected in the MAU numbers because a significant percentage of our customer base is customers that trade crypto as well.
MAUs moved up a little bit in June versus May, and it moved up a little bit more in July. So it appears to be stabilizing and kind of moving back up a little bit.
I'm wondering if it's mostly a function of price, right? Like MAU might be highly correlated with price.
Numbers. Any chance that you would give us fully paid SEC lending accounts and clients that have opted to use the cash card?
So fully paid is 1.5 million. Cash card, offhand, it's a couple 100,000, I think, that are funded, and about 1 million that have signed up. And I think the X1 acquisition really doubles down on the spending strategy. We want Robinhood to be a place to handle all of our customers' critical financial needs. And we want them to be able to spend with debit cards or credit cards, really at their choice. And so X1 and the cash card, I think, are a nice complement to each other.
Got it. Great. Thank you very much.
Thanks, Ken.
Thank you. One moment for our next question.
Okay, guys, that's all the time I have. Thank you for anyone who watched this whole video. I hope you enjoyed it as much as I did. The team at Robinhood, it was great to hear from them, and they really are doing interesting things. Let's bring up their public website. I don't think I can actually change to... Okay, maybe it's too hard. Can I do it? I give up. We can just go to talk about what I think is unique about this company, and then I think if I can do the same thing with Coinbase and a few other earning calls. Might be fun. So I guess I don't know the latest stuff on Robinhood, but a lot of what they talk about is their mission being to democratize finance. and to make it accessible to anyone, to everyone. And there is something about money that locks you up or frees you. And there traditionally, and not even that long of a tradition, since like whenever we made options, I don't know, the 70s, all this stuff is brand new. It's pretty awesome. Traditionally, the tools that Robinhood is making available in their app has only been accessible to a really limited number of people. And so now it's going to be such a disruptive force. It already must be. I think that if there are some kind of like shady characters though that are out there that are trying to like capitalize off of, you know, like front running customers or whatever, even if they're like downstream from the order flow of retail, just imagine what AI is going to be able to do to you. Just imagine it. And then maybe think about like making a little less money, still make a lot of money, just make like, don't scam anyone, don't scam your customers. The reason I bring all this up is one of the biggest like knocks against Robinhood was, I can't even remember what it's called, but basically the way that they offer commission-free trading is by selling the order flow, the data, which is like insanely valuable. I think it might be equally as valuable as the order flow from institutions. So like if you use the Polygon API, polygon.io, you can start pulling in some of this data. The cheddar flow, there's like a bunch of services that aggregate the order flow from options. I think that the order flow and dark money and all this other stuff, I think the order flow from retail is an incredibly interesting signal. And it would just be one more signal, right? Something to consider. I'd be very interested. You want to know what would be wild? This would be wild. What if there was like a trending list? They could do this. Why shouldn't they? Couldn't they? You know, I don't think there's anything wrong with it. Gotta get a drink here. Excuse me. Okay, one thing they could do is create like just the top 25 list or like the trending list or whatever. And it could be by second, it could be by minute, by hour, by any time period. And it's basically, you know, the Shazam top 25 or whatever, like the Spotify, here's what everyone's buying or selling per time period. I think would be pretty interesting. So there's all this fun stuff that can be built, but a lot of what needs to be built is actually pretty practical. Damn, that retirement account is a good idea. It's the timing of everything is so crazy. But yeah, I guess they're doing 3% match, which is pretty crazy on Robinhood. If you want to set that up to be your retirement account, they'll match you up to 3%. And so I think here's the thing I'm most excited about. There's so much to be excited about with fintech, okay, in general. And then like who is positioned to best capitalize on fintech is Robinhood. I guess maybe SoFi, but like we'll see, right? They're both great companies. And so the opportunity, what am I trying to say? The opportunity with fintech, what is it? Well, it's certainly democratizing finance, but there is something really practical I was leading towards, which I'm blanking on. I'm sorry, guys. I'm sorry. If I remember it, it'll come back to me, and I'm sure I'll talk talk about all of it in the fullness of time in these rants. But I do have a lot more to say about Robinhood, even though it's getting dark on us. Just that, oh shit, it's raining. Okay, I guess I gotta run. Great live stream. Like, I got more stuff to say, but I'll have to maybe do it another time, another day. Like, it's an exciting company because it is taking all of the opportunity that used to be available to the insiders in the institutions, and it's making it publicly available. And in that democracy, there will be tremendous disruption. And then we can build cool tools and widgets and fun things too. And so we'll talk about it all, and it'll be great. Thanks for hanging out. See ya.